Hey guys, Dom Trimboli here from Refinancer. Now today we're here to have a bit of an update in mid-May of what is happening in the Australian property market and the interest rate market as well. There's been a few things that have happened that are really worth your attention and just to kind of note and really help you analyze what to do next with your mortgage and with your property as well. So we've seen a major lender, St. George, announce they're going to put an end to their cashback program at the end of the financial year. This is really big news because there's a number of lenders still doing great cashbacks and a few have already stopped as well. So St. George stopping may suggest that other lenders will follow suit as well. Now, I'm of the opinion that they will come back strong at some point, honestly is anyone's guess, but the big kind of thing around that is you may have a couple of months to get a $2,000 or $3,000 cashback just before it really calms off. So a refinance over the next 2 months could be of a higher value proposition than something, later in the year. I think personally when rates start to really trickle down, they're going to really return them and incentivize everyone, and whether it's a cashback or whether it's a frequent flyer program or something, that will come. But in the interim, this could be that little moment to really take advantage of it. Now, the second thing that's happened over the last week or two is that fixed rates have actually slightly increased with a few lenders. And it's hard news to interpret given that inflation goals are actually on target, albeit a little bit slower than projected previously. But we've seen ME Bank and BOQ increase their 2 and 3 year fixed rates by 10 and 20 basis points along kind of both lenders there. So previously when you had as low as 5.79, you're looking at about 5.89, 5.99. It's hard to say whether they will keep going up, but we still do have lenders at that really sweet spot of 5.79%. So if you are of the opinion that fixed rates or rates in general will stay or take a little bit longer than expected to go down, a 5.79 fixed still could represent value. Now, there's another train of thought where you are thinking that they're going to come down, and really it's not a question of if, but when. If it's going to be a few months, could it be a year or so? So those who have an opinion that rates will take a little while to come down, this fixed rate is actually a really good option. But those who are thinking it's going to happen sooner than later, then it might be something to pass up. You may find more value in a variable rate instead of that as well. The variable rate will be a little bit higher, but it will give you the flexibility to kind of hedge your bets, or so to speak. So for anyone looking to refinance or anyone looking to buy property, what is a course of action for yourself? By speaking to one of the guys here at Refinancer, not only will we talk you through these two options, ultimately whether to go fixed or variable, we'll also have a look at your position holistically to see if you can purchase another property, to see if your structure is right. You would not believe how many people we speak to and their structure is just not right for them and they're leaving, money on the table. It could be as simple as someone's paying their mortgage monthly instead of weekly and, having an extra payment per year for no reason. Or they could just have a principal and interest or interest only split that's not working for them. They might have debt they consolidate. It's just good peace of mind to really get a feel for whether you're in the perfect position. The other thing to really consider too is when rates inevitably go down, to have foresight as to what the market will do and what it will look like at that point. It's very easy to get caught up in the right now mentality where rates are high, things are a little bit tough, but you have to kind of think about where could things be in 2 or 5 years, and we can really help you along that journey to understand your borrowing position. It might be as simple as you telling us our family's ambition is to buy an investment property in 2 or 3 years. In 2 or 3 years, will we be in that position, or what can we do now as a course of action to enable that? And we'll give you a plan and ultimately tell you if it's a yes, no, or this is what you need to do. So that's pretty much it for our May market update. We'll keep it short and sweet. If you want to contact one of our brokers, feel free to just click one of our links below or even send a comment or go to our website and we'll make sure to get a broker speaking to you on the phone within 24 hours. Thanks a lot, guys. All the best, and we'll speak soon.